The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit AbsoluteLoans.com or call 888-90-HOMES for cost information. You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to the Money Hour at 11:50 a.m. KKNW, the Saturday, December 20th show. I am your host and mortgage expert, Tina Mitchell. Thank you for taking time to talk money. I bring into studio each week the best of the best experts in our local market on everything that has to do with your money. I'm here to help you in today's economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but I can answer any questions that you have. And more importantly, I can connect you with the guests that I have in studio today. Please call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And the lineup for today's show, I have Denise Lonis, founding partner of the Lonis Group, a true superstar in the real estate community. Real estate agents all through the country hire Denise to coach them, and she is a national speaker as well, and well known for her forecast when it comes to the real estate market. So excited to hear what she has to say about our upcoming year right around the corner, 2015, and what's going to happen in the real estate market. And back in studio again, Janet Greenling with Genworth Financial PNW Insurance Services. Establishing a long-term care plan in advance may help make it easier for you to maintain your dignity, protect your hard-earned savings, and secure a healthy financial future. And last in studio, first-time guest here on the Money Hour and visiting with me is Keith Medley, owner of Final Phase Inspection. If you're purchasing a home, how do you know the history of the house, and how do you know what to anticipate for what that future of that home has to offer as well? So we're going to talk about the inspection and how it tells a story of your home. Great information and great guest in studio. For more information on any of the topics discussed, of course, you can call the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. Now it's time for a little money chat. Money. I know I've talked about the tax credit before, but I know I've got new listeners out there. And for regular listeners, I'm going to talk about it again because this is just an awesome thing to take advantage of. If you're not in a position or looking at buying a home, you have to know someone, whether it's a family member or it's a neighbor or it's a coworker. Those first-time home buyers out there are losing thousands, tens and hundreds of thousands of dollars in this tax credit, depending on how long they're keeping their property. And so I want to bring it in today. It's the end of the year. It's a great way to start out the new year in buying a home, getting into home ownership. And a lot of you are not in a position to do it because of where your payment objective is and being able to accomplish a property in our amazing market. So if I could give you an option that would help you purchase another $30,000 to $50,000 in a property, it might help you get into home ownership versus continuing to be a renter. So it's called the MCC Mortgage Credit Certificate. It's a government guaranteed tax credit through the Washington State Housing Finance Commission. It is a tax credit. It's not a deduction. The difference between a credit and a deduction, a credit is a dollar for dollar, and a deduction is a percentage of. If I had a choice of getting 25% of or getting 100%, I would choose the credit, which is 100% dollar for dollar. Here's what it is, a 20% tax credit. So all the interest that you pay on your mortgage for the life of the loan, you get a 20% dollar for dollar credit right back. Again, 20% credit for the life of the loan on all the interest that you pay. So on a $400,000 loan, if you locked in at a 4% interest rates, I'm not quoting rates today, just hypothetical purposes only, that would be $16,000 in interest for the first year. Take 20% of that, that's $3,200 divided by 12 months. That's $266 a month in a savings. What does that equal to? Depending on the loan program that you're going with and the down payment, if you're looking at a lower down payment option, anywhere from 0 to 5% down, that's going to make a difference of buying potential of $30,000 to $50,000. That's a huge amount, and I guarantee you it may make the difference between you getting your home and not. Now, what you can do is you can amend your W-4 with your employer, because if you leave things the way they are, this is going to be a savings that you'll see at the end of the year. So let's say in this example, you had $32,200 savings for that year. What that means is if you had $10,000 in income tax, you're going to pay $3,200 less in income taxes. But it would be nice to be able to see that money up front in your paycheck, in your net take home. That's what you want to do is you amend your W-4 after consulting with a licensed CPA. And being that this is the Money Hour, of course, I work with the best of the best in all areas of financing. So if you need a referral or an introduction to an industry leader in that arena, let me know. You want to consult with a licensed CPA that can can coach you on how to amend your W-4 with your employer so that you can see that additional $266 a month in your payment rather than waiting the end of the year and seeing the benefit. Regardless if you need that cash flow, I would always do that because I don't like the government collecting interest on my money. I'm sure that there's somewhere you can invest that savings if you don't need it for your payment objective in something that's going to earn you some type of return. Now, this is not a program. It is a government guaranteed tax credit that goes in conjunction with any loan program you want to utilize. Conventional financing, FHA financing, VA, USDA, zero down, which I'm going to talk a couple minutes about a grant program that's out there as well. So it's in conjunction with that. So why don't you hear about the tax credit? Because very few people know that it exists. And I'll tell you why. It's for on the mortgage side, the mortgage professional that represents your financing. It's as much work as closing 3 loans versus 1. And they don't make additional income for doing this. So there are a lot of hard work for your mortgage consultant. Really nothing for you. You provide an extra year tax return. So instead of 2 years tax returns, you're going to provide 3 years. But for the mortgage consultant, the company that is actually putting that together, it's a lot of work. So that's one reason you don't hear about it. The other reason is a lot of mortgage companies don't back it. They're not doing the tax credit because of the additional processing and that it takes to do that, or they don't have the programs, the options to support it on the secondary. There's a lot of different reasons. Brokers can't get certified through the Washington State Housing Finance Commission as your individual loan representative. You have to be individually certified. So brokers there's no option for them to get certified at all. You need to either be a mortgage banker or correspondent channel. So if you're asking the question about a possible refinance, I have clients that took advantage of the tax credit back when their interest rates were higher. They're actually coming back and being able to take advantage of the refinance opportunity. So you can refinance and reissue that tax credit with your new loan. But no, if you're sitting out there after you've closed on your home and did not take advantage of the tax credit, you can't refinance and get it because you can only take advantage of it at the time you actually purchase your home. But it can be reissued again with a refinance. What's going to prevent you from qualifying is you're not a first-time home buyer. You need to be a first-time home buyer. Definition through the state is you have not owner-occupied a property in the last 3 years. So if you lost your property in the financial mess that happened, but you've been renting for 3 years, you are considered a first-time home buyer again, so you would qualify. The other is your income. So you can't make too much money to qualify. It's really set up for people that need to utilize the program. So the magic income, purchasing a home in King or Snohomish County, 1 to 2 people in your household is $90,000. If you make a penny over $90,000, you can't qualify for the tax credit. If you have a baby at home or a household of 3, it's $97,000. Pierce, Thurston, Kitsap County, 1 to 2 persons in your household, $80,000, 3 plus in your household, $90,000. There are also purchase price limitations. You cannot purchase a home that exceeds $450,000. Purchasing in King, Snohomish, and Pierce County, $370,000. Eligible for any property, single family, condo, actually not any property, manufactured homes, you cannot utilize it, but single family or condos you can. Last, I just want to wrap up with the grant because it's perfect to go in conjunction with the tax credit. But for this grant, it actually is not only available for first-time home buyers. You do not have to be a first-time home buyer to qualify for this grant. You do have to be purchasing your primary residence. Now, grant means you don't have to pay it back. That's exactly what it is. It's a grant for 5% of your loan amount, which means that you can get in with a 0 down payment. There's no mortgage payment. There's no interest, no payment on the second mortgage. There's no interest and you don't have to pay it back because it's truly a grant. If for some reason you make over the maximum income restriction, this income restriction is easy. It's $97,000 period. It doesn't matter how many people are in your household. It doesn't matter what county you're purchasing in. It's $97,000. But on this one, you can actually get a little creative. Tax credit, you cannot. But on this grant, if you are purchasing with a spouse or a significant other and combine together the two off the loan and you make less than $97,000, as long as you can qualify with just the one income, Because if you're leaving your spouse or your partner off of the loan, you can't utilize their income. But if you don't need that income to qualify, then that's a creative way to get in and take advantage of this program. It is in conjunction with FHA or conventional financing. And that's what I have for you today on my Money Chat. And coming up next on the Money Hour, last year was a stellar year for the housing market. What's going to happen this year? I don't know, but I got somebody that knows exactly what's going to happen because she's right almost all the time on what her predictions are. Denise Lonis, founding partner of the Lonis Group, with over 2 decades of experience in the real estate industry and a nationally recognized speaker, is going to share her forecast for 2015. You will not want to miss her right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, December 20th show. Each week, I share expert advice and inside knowledge on how today's events in our local economy can affect your money. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can always call into the show at 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. And I'm so excited to have, not in studio on the phone, but she is just a busy, busy lady, Denise Lonis, founding partner of the Lonis Group. And what are the experts saying about the real estate market and the forecast for 2015? That's what Denise is going to talk to us about. And Denise, I'm so excited. Thank you so much. I know that you're just crazy busy and at high demand for people. So I appreciate you joining in on the show today.
Well, this is one of my favorite places to be, and I love chatting with you and all your listeners, so I am thrilled to be able to be here, and I really appreciate you having me.
Of course, Denise. And a little bit about Denise. She's founding partner of the Lonis Group. Denise brings over 2 decades of experience in the real estate industry with expertise in strategic marketing, business analysis, branding, new home projective planning, product development, and agent broker coaching and training. Denise is nationally recognized as the source for all things real estate. Denise's background in residential real estate and sales management include an impressive list of awards. Denise was recently nominated by MN News as one of the 100 most influential real estate leaders in the country. Denise is a strong and respected voice in the real estate community. And I know every time, Denise, I have you on studio, it's just high demand on their social media platform and people want to listen to your forecasts. And I know this one's just going to be crazy because it is forecasting for next year. And I've, as I was bringing you, introducing what was coming up before commercial break, and just how a majority of the time you're just spot on with what you're thinking is going to happen in the future. And so I'm just excited to go over this with you. So let's talk, Denise, on how the real estate market, it seems to slow down a little bit. What's going on?
Well, it slowed down, but that is just a very temporary measure. And the thing I'd like to point out is, I'm not an economist, but I have been doing predictions for the last 13 years. I definitely am a real estate analyst, and I analyze all sorts of things. I don't just analyze what's happening in the Pacific Northwest or in the Seattle marketplace or in Washington State, but in order to really get the flavor of what's going to happen in the following year and the next year, you have to look back in history, you have to look back at events, you've got to look at what's happening globally, regionally, economically, politically, health. You have to look at all these things. So I analyze all of these factors, and then from that, I'm able to sit back and make some pretty, I've made some pretty good predictions over the years, and it's only because I do analyze everything, and I analyze from all sorts of sources. So the market has slowed down right now. It usually does slow down at this time of the year. People are taking time for the holidays, but we're really just taking a breather because the one thing that we still have not replaced in our marketplace is new construction. And what's happening is we have recently seen our foreclosures just hit rock bottom, which is a good thing. So the foreclosure crisis is nearing its end, and which is wonderful for the market. But what happens is now that we have taken that foreclosure inventory out of the market, now that we have taken, now we're back into the busyness of the holiday season, it feels like we've slowed down. However, we were, in the spring of 2014, we were moving at a pace that was actually not real healthy. There were so many multiple offers. Things were going crazy. Prices were rising too quickly, and now we are moving into a very much more healthy market, a more balanced market. So while the market has slowed down, it's really just taken a breather, and we're going to have a very robust spring for sure. So although the market's a little slower, it is not a sign of things to come. It is just really an opportunity for people to rest. But I will tell you that come spring, there are so many sellers out there that are thinking that, okay, now I have made back some of this equity that I thought I had lost, so now is the time that I'm going to sell. And we're going to see this whole domino effect of sellers coming into the marketplace with some inventory, which is good. We need that inventory. Then we're going to see them needing to sell that inventory. They're now going to have an opportunity to buy up. They will be able to sell that inventory to the buyers that need to be buying it. We're going to see less multiple offers in such a crazy, frantic way that we saw in 2014, but we're moving into a very healthy, growing market. We are in a state of growth right now.
That is great. Great news, Denise. And what about Puget Sound happening with the inventory right here? Well, so you're talking about more inventory coming on the market, so that's good.
Yeah, absolutely. So what's going to happen with inventory? First of all, it's a really good thing that more homeowners are expected to sell their homes next year.
Yes.
And the reason for that is that there's no doubt that we're going to see more buyers entering the market. The reason for that is a number of things. First of all, we're going to talk about it a little bit later on, but the millennial generation, that market is coming on very, very strong. We have the baby boomers that are settling into new homes, different types of homes. We have those people that weren't able to buy because they either weren't qualified, couldn't get qualified, had perhaps lost a home in 2009 and weren't quite ready. They've been building that credit back. So 2015 is going to see a year where we're going to see some more inventory come on from our sellers that should be, and I'm glad that we have that inventory, but that inventory is still going to be consumed by the marketplace. There's no doubt about it. And if we look at the marketplace and we look at the improved job markets, whenever you have improved job markets anywhere, that always brings more buyers into the marketplace. And according to the Bureau of Labor Statistics right now, nationally, right now, we have the unemployment rate standing at around 5.8. That was the end of November numbers. That is the lowest number it has been since July of 2008.
Wow.
That, coupled with the fact that we have now stabilized our home prices and those losses that people were seeing, they now have had that appreciation back, and the fact that we've got fewer bidding wars, that's actually going to, again, stimulate the market, because those buyers that couldn't get into the marketplace because maybe they had tried on one home or two homes and they kept losing because they were competing against 10 or 15 or sometimes 20 offers, they left the marketplace. They were disappointed. But now in 2015, they are going to return, and they're going to return much more educated. They've been down this road before. They know what to do. They know how to do it. They've got their agent in place. They know what they're looking for. So these sellers that are bringing this inventory on are going to see that there's a real sophisticated buyer out there that is going to come in and pick up those homes. So it's going to be a robust spring.
Well, and I always tell people, a lot of times people have more of an opinion in what's happening in the employment than they do in real estate. But just real estate always follows employment, just as what you said. So what about interest rates, Denise? This is my arena, but every expert, including myself, has just said for years now that these rates have nowhere to go up but up, and with quantitative easing and that backing off. I mean, what is your prediction in when these interest rates are going to go up? Not that I want them to, but it's like you're kind of like it's got to happen. When is it?
Well, the thing is that I know that we have gotten real spoiled and we get excited about these low rates, but in reality, when an economy is improving the way our economy is, that is a good sure sign or a signal that interest rates should be increasing. It's good. I mean, there has to be a balance there. The new rates, because of the fact that we've got this job growth and this increased job growth, all those things, the signs are there. Also, the Federal Reserve has indicated that they're going to increase the federal funds rate in 2015, and that fund rate has a significant effect on mortgage rates. And the federal funds rate has remained near zero since December of 2008, and I personally expect that the 30-year fixed-rate mortgage is going to reach 5% by the end of 2015. I can't imagine it not getting there. I just think that, that affects a little bit of the affordability index, that some people that would be able to buy more house for their money if the rate stayed the same, but that also with and I'll call it the threat of that or the talk of that or the discussion of that, there again, that stimulates those buyers that are saying, wait a minute, we have risked waiting long enough. We don't think the rates are going to go any lower. There's a lot of talk, and we see the economy improving. Things are getting better, so I think it's time to buy. And that's why I'm telling people all over that there are going to be buyers in the marketplace in big numbers in the new year. There's no doubt about it. And the serious buyers are out looking right now.
Yes, yeah, and I why not? I mean, if there's keep looking. If there's a house out there that meets your requirements, the sellers are definitely in more of a situation that they need to sell. Otherwise, they wouldn't be listing during the holidays. So, Denise, what about the millennial generation affecting the market?
Well, there's a number of things. I just want to address one quick thing about, in 2014, what we saw is we did see house prices rise fairly considerably, and I'm going to call it in the urban, high-demand areas. In some places, we saw price increases in the double digits. And one of the things I'm saying for house prices in 2015 is I definitely see that we're going to see a very, very strong increase still in those urban high-demand areas because of things like the millennial generation, which I'm going to talk about in just a second. But overall, I'm predicting a more modest, around a 4% house price increase for 2015 across the board. But that's single-digit, but there will be double-digit increases in certain areas, and we're going to talk about those areas. Let me talk a little bit about and answer your question about the millennial generation. A decade ago, baby boomers made up the largest part of the population. But in 2014, the Census Bureau announced that the millennials are now larger than the baby boomers in numbers. And here's what's really interesting. Those millennials are now getting married, they're starting families, and therefore, what do they need? They need housing, and more than 2/3 of household growth in the next 5 years is expected to come from the millennial marketplace. And as the job market improves, and as the millennials start to make more income, they start to pay down that student debt, they get themselves more qualified and ready to go, they're eager to buy a home, they're eager to set up their families. So one of the things that we're going to see is we're going to see a large surge in this buyer group aged 25 to 34. And the demand from the millennial marketplace also is keeping not only pressure on the market, but it's going to help to boost those house prices. Plus, it's making builders look a little bit differently at what they're building, because the millennials don't want 4,000 square foot homes. They don't want 3,000 square foot homes. They want a moderate-sized home. They want locations very important. They are, for them, it's all about convenience. It's all about a smart house, a well-laid-out house. So that is really, really important. But the millennials are going to really drive the market. And on the tail of those millennials, we still have this really strong base, this baby boomer buyer, and the baby boomers are looking also into these urban metro areas. They are really excited about changing their lifestyle a little bit. And in fact, it was just very interesting. Just this morning, NAR came out with their list of the top metro areas that are attractive to those baby boomers. And a lot of those areas have to do with areas that have sunnier weather, lower cost of living, great lifestyle. And in the state of Washington, for example, we've got areas like Spokane, Tri-Cities, Wenatchee, and then you've got this wonderful urban, cool, hip lifestyle happening in Seattle, and even areas where I'm from, up in the Bellingham marketplace, our Fairhaven district. People, those baby boomers are looking for that quality. So we've got a lot of people making a lot of choices about housing. And now that these millennials have topped the baby boomers, we're going to have a very interesting 5 to 7 years in the market.
That is so exciting. Denise, thank you so much. And next time I have a call in with you, I got to do the whole show. Just having you for one segment is not enough time at all. So we'll get you booked back when it works with your schedule. And just thank you again so much. I really appreciate it, Denise.
Absolutely.
Coming up next on the Money Hour, long-term care is a hot topic and how you are planning for it. Janet Greenling with Genworth Financial, PNW Insurance Services, right here on 1150 AM KKNW after this short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
Sometimes the most important conversations are also the most difficult to start. What are your plans for the future should you have a long-term care event? Can you afford a comfortable retirement? The PNW Insurance Services is here to help you start these conversations with our Let's Talk brochure. The PNW is the country's leading agency for Genworth Financial long-term care, with the #1 Platinum agency 2 years in a row. We want to build a trusted relationship with you to navigate your future.
This is Janet Greeling with Genworth Financial and the Pacific Northwest Insurance Agency. Please call 844-LTC-4U. That's 844-582-4968, or you can reach us at www.pacificnwagency.com.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert Tina Mitchell right here on 1150 AM KKNW, the Saturday, December 20th show. Each week I share expert advice and inside knowledge on how today's events are going to affect your money and what's happening in our local economy. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can always call into the show at 1-855-400-1150. Again, that's 1-855-400-1150. Definitely want to hold on to that number because I've got two amazing guests coming up that are going to talk about things that everybody needs to know about inspection for your home, whether you're purchasing a home or you own a home. And then right now with Janet to talk about long-term care. Janet, thank you so much for coming back in the studio. I appreciate it so much. And this is such an important topic for people to understand about long-term care. And I think it's something, unfortunate, you would know this more than myself, but it's an area that people are not thinking about soon enough, and then it can be a disaster.
Correct. Yes. Thank you so much for having me back. I enjoy it.
And a little background about Janet. Janet is with Genworth Financial, and long-term care began with her personal long-term care experience with her own mother. Now, 6 years later, she sees so many things that she could have done differently that would have saved her family years of stress and financial concern. Janet entered this industry first to help a pilot the USAA account for a local long-term care broker, then moving into national account acquisition and doing contract work for the country's leading long-term care awareness nonprofit 3 and 4 Need More. She has now found her home as a marketing director for the Pacific Northwest agency of Genworth Financial. She's dedicated to working with their agents to become stewards of the industry through education and planning. Educating people is the key to success on long-term care planning. So what's going on with long-term care, and why should my listeners pay attention and create a plan?
Well, they should create a plan just like anything else. If you really think about our lives, we are really focused around planning. We plan for weddings. We plan for our homes. We plan for our college education. We even plan for our funerals. This is no different. Planning for your future, since we have a very high rate risk of being going towards care. 3 out of 4 of us will need care in our lifetime, so it's definitely something you need to think about and plan for.
So, Janet, is there a product for retirement? Is this a product for people that are retired, or if you're a long time away, or your parents are a long way from retirement? Should they be thinking about doing this? Should I be thinking about it?
Right, absolutely. Thank you. There are a lot of really big financial names out there. Susie Orman, different folks have often advocated, looking into this type of insurance when you turn 50 or really 60. But when you think about it, you buy this with your health and you buy it with your age.
Yes.
So the longer you wait to plan, the more difficult it can be to do this. So we're really encouraging people to bring that peace of mind much earlier, even as early as your 40s.
Yeah, and that makes total sense, Janet. And I think sometimes as you procrastinate and push things off, then you push it off too long to where you've lost that opportunity, and that's where it's devastating for people. So, and this is, but we are talking about insurance for the end of your life or a facility. What if people are wanting to stay in their homes, or I have a listener that has parents that they want to stay in their homes, they don't want to go to a facility?
Sure.
How can it help?
Let me address one thing I heard you say.
Okay.
End of life. I really want to specify that long-term care can strike at any time.
Yeah.
Remember that it's not just end of life, although that's particularly where it's usually used. But if you got in a car accident today and were paralyzed and or severely disabled and could not care for yourself for the rest of your life, you would need long-term care.
Yes.
So it really can happen at any point.
Okay.
So going back to the original question, if you could repeat.
Yeah, so if they want to stay in their home,
right.
So if they're looking at not utilizing to help and get them into a facility, but they want to be able to stay in their home.
Right, thank you. So there are most of the plans out there, and of course I work for Genworth, but there are many other carriers out there that bring long-term care insurance to the table. And they will, most of them do allow you to age in place. And that has become a far more attractive option for most people. They don't necessarily want to go into a retirement home or a nursing home.
Sure.
So oftentimes you can have caregivers come in, even family members come in on some of the plans.
So in long-term care, Janet, meaning making sure that you have a plan for the possibility that you can't care for yourself someday. Should you be talking to a specialist? Can't a family member decide what's best for them?
Sure. And, we ran into this even with my own family. You have a lot of discussions, and sometimes you have that agreement with your family members. Well, I will take care of mom if something happens.
Sure.
And your brother says, great, I know you will take care of her. Well, fast forward 20 years when that occurrence really happens.
Yeah.
And if you don't have something written in writing or, through either advanced directives or wills or those types of things, or in just a long-term care plan or an insurance plan, it puts yourself at more risk. So this way, by having that plan, you know exactly what's going to happen. And the nice part about that, too, is your parent or whoever that you're caring for has been able to have that discussion with you when they're in a frame of mind to be able to give their opinion.
So let's talk about that, Janet, because it's the holidays. And during the holidays, we get together with our family and our parents and our grandparents, and hopefully we're able to enjoy it with our entire family. Maybe not the appropriate time to put a damper on the holidays and Christmas dinner and talking about long-term care or worse when they're going to be passing. But I mean, really, this is a perfect time to have that conversation.
Absolutely. And that's, it is a very gentle topic you need to approach. And I do have a lot of people say, gosh, I hate to even bring that up. I don't even want to think about my parents passing. And, they get really edgy talking about it. But again, to be able to say, we're going to be all together during these holidays. And if you put a positive spin on it and say, as I did to my mother after she had her stroke, and I said, Mom, I know it's hard, but let's sit down and make this decision right now when you can still have your opinions honored and we can have a cohesive plan put together that's exactly what you want. And then we don't ever have to think about this again and we can all rest at ease knowing that this is taken care of. And with all the family members there, you don't have to sit back and think, well, we wish, our son Johnny was listening in on this. You can really gather your family around and do it for the positive reason that it is going to make life easier for us to care for you.
Exactly. And I know that our parents are there. That's a stress for them in thinking about, are they going to leave something behind that's going to be challenging and hard for children? So what about with the type of policy, what circumstances is it that you're going to see this policy be active and used? Right.
So, and that is a really common question. There's what's called ADLs, activities of daily living.
Okay.
There's 6 basic ones, and then obviously cognitive as well is a ability all by itself. But if you just basically think about what the things you did as you got up this morning, you transferred, you bathed, you toileted, you fed yourself, you dressed, all those basic things. So what we'll turn a policy on is if you have 2 or more of those basic needs that you cannot meet yourself.
Okay.
Or if you have a cognitive impairment, such as dementia, which was my mother's problem. She could do all those other things, but her brain didn't allow her to do it correctly. That will turn on your policy.
So what about a waiting period time to turn the policy on? Is there a certain time from the time that you activate that insurance to where you can actually utilize it?
Right. And the nice thing about long-term care insurance is it's something that you can really tailor specifically for your own needs.
Okay.
As in most things in life, you can just about pay for whatever, bells and whistles you want.
Sure.
Most of the policies I see are written with a 90-day waiting period. And a lot of times that goes hand in hand with Medicare, because Medicare will pay for a short amount of time.
That'll cover that.
That'll cover that up to about 100 days.
Okay.
And there's a lot of different specifics that go along with how that's covered. But again, remembering that long-term care is for a long-term issue, not short-term. So, a lot of times you might get into what you think is a long-term care situation, and six weeks into it, you find that you're healing, you're improving, you can go back to feeding or bathing or dressing, and you really didn't need that to be turned on. So a good way to, watch the costs on the policy end is to make sure you have that wait time built into that policy.
Yeah, it makes total sense.
Yeah.
So hopefully my listeners have financial planners and they're using, I've got some experts here that I bring on a regular basis. I always talk about building that strong wealth management team, and there's a key piece in all of it. You are one piece. That financial planner is another one. Should they be talking to their financial planner about their long-term life and policy?
Absolutely. And we really encourage that. Like you say, most folks, they do have a financial planner already in place. Long-term care insurance is a very specific niche that, you have special licensing for it. It's really quite complex and it changes quite often. So to be an expert in it, most of the agents that work for us primarily work, I'd say 90% of their work is all done just simply in long-term care insurance. So we encourage you to talk to your financial planner, and if they are not, they aren't as knowledgeable about long-term care situations, which many of them are not.
Sure.
That's where we love to come in. We will even come to their office, hold office hours so they can work directly with us, so they know exactly what's being done and what we are advising them. So we really do create a team effort for that family.
Makes sense. And Janet, what measurements should a listener use to choose the appropriate carrier for this type of insurance?
Right. So, when you're doing your due diligence, obviously we all have good competitors, but some of the things you want to look at are the longevity of the company. How long has the company been in existence? Genworth, for instance, has been in existence as a financial company for decades. Long-term care has only been around for 35 plus years.
I didn't realize that.
Yes,
wow.
It's a rather new insurance, which is why we're getting our actuaries and people. The mainstay of folks coming through right now are starting to turn those policies in, 20, 30 years later after purchasing them. So really, the best thing I can suggest is go in and see what the rate of claims are being paid. Genworth is very, very proud to have over $10 billion paid out on claims. And we pay approximately 93% of all claims that come into us, which is the highest in our industry. Yeah. And that's why we call ourselves a steward. So whatever you're putting money into, you want to make sure that you have the best hope of getting that money back out when you need it years to come.
Got it. I just encourage you to be having this conversation now. We talked about the holidays. It is the right time. Get through dinner and sit down as a family and talk about these next steps for everybody's life and make sure that you're prepared for that. Janet, thank you so much for sharing your wealth of information on such a personal topic for you and for me as well. And I just hope that my listeners heed and get some help and assistance in this area. Make sure that they're planned for it.
Great. Thank you so much. That is my wish as well.
Okay. Coming up next in the Money Hour, the home inspector is the person you need. Different than an appraiser who determines the value of your home, the inspector determines today's condition and what the home may need in the future. And whether you are a current homeowner or you're purchasing, you want to understand what an inspector does. Keith Medley, owner of Final Phase Inspection, right here on 1150 AM KKNW after the short break.
Mortgage fraud has been rampant since 2007. Many folks don't know they have legal rights. Find out if your mortgage loan has wrongdoings and fraud. Magnum Law Group will do a free audit of your loan documents. Facing foreclosure? Need to stop a foreclosure sale? Magnum Law Group can help. We have experts with valuable knowledge, and we can get results. Have you decided to short sale your property instead of a foreclosure? Magnum Law Group has the experience to negotiate better and faster for you.
Hi, this is Deborah with Magnum Law Group. Please contact us at 425-454-4300. You can visit our website at www.magnumlawgroup.com or call us at 425-454-4300.
This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, December 20th show. I build a network of elite industry professionals every week sharing their knowledge and expertise for my listeners. If you're hearing my show at a different time or day, you're listening to a rebroadcast, but you can call into the show at 1-855-400-1150 or go online to themoneyhour.com and I can connect you with any of the guests that I have in studio. You can listen to the podcasts that are streamed on my site and encourage you to enjoy our social media platform as well. And in studio right now, first time I've had Keith in studio, Keith Medley, owner of Final Phase Inspection. And what does a home inspection cover? Why do you need one? And how will this help you in today's real estate market? Keith, thank you so much for being here. I'm so excited to have a conversation with you for the first time.
Thank you so much for having me here. It's definitely a pleasure.
And at least first time having conversation with you on mic, because I've had many conversations with you, but right here in studio is a first. And a little bit about Keith. Keith launched Final Phase Inspection in 2012 and has been licensed in Washington home inspector ever since. He spent his early years learning the ins and outs of home construction and has remained a student of quality construction methods. As an inspector, he's a member of American Society of Home Inspections. At Final Phase Inspection, they are proud sponsors of the Boys and Girl Club and also proud sponsors of the National Guard and Reserve. They are also members of Nectar G, an organization dedicated to providing trusted resources to seniors and boomers. So Keith, let's go ahead and start out with a home inspector and when they are needed.
Well, excuse me, there are There are a couple main reasons why you would need a home inspection. The most common that people are familiar with is when they are purchasing a home.
Okay.
But also remember that when you're purchasing a home, you could be purchasing a brand new home versus an existing home. And typically, most people don't think of needing an inspection when they buy a new home.
Which you need it a little bit more sometimes on a new construction, right?
Absolutely. Equally beneficial in both places. Also, if a homeowner is getting ready to sell their home, is an excellent time to have a home inspection.
Yeah.
We'll talk a little bit about that more later. But there's also a product called warranty inspection. Now, for people who have had a home built for them, typically the builder's warranties last a year.
Yes.
And at that point, they've done everything that they can to make it functionally correct. It's a perfect time to bring in an outside resource to take a look at it and just make sure that they're getting the maximum value out of that 1-year warranty.
Makes total sense. So if you're looking at purchasing a home, if you're looking at selling your home, you definitely want to have it prepared. If you're buying new construction or you're in a new construction home, you want to have the guy that's going to tell you all of the details of the home, good and bad. And I think really you're hiring the inspector to tell you what could be going wrong so you can prepare for the future. So what about a typical inspection process? Tell me what that's like.
Well, let's approach this from someone who's purchasing a home.
Okay.
Typically, they will schedule an inspection, which is a process that happens between oftentimes the realtor will give them some options on who to choose. They will schedule an appointment and immediately set up a date and time to go look at their new home. At that point, the inspector will meet the client as well as the realtor on site, and we do a quick discussion up front, and we talk about any known issues with the house. We want to make sure that we understand the client's needs, how they plan to live in the home, so that we can ensure we're inspecting it appropriately. A typical inspection will last anywhere from 2 to 3 hours, and it covers all of the exterior areas and interior areas, which also includes below and above in your foundation and your attic as well.
So what are in the main interior and exterior elements included in a home inspection, Keith?
Well, a typical home inspection literally looks at thousands of items. The way an inspector approaches it is looking at functional systems, because really what we're looking for is the functional health of the home. So systems on the exterior could be as simple as your driveways, walkways, and patios, because here in the Northwest, moisture is one of those things that will cause damage anywhere it can get to.
Yeah.
Your primary areas on the outside are your decks, your steps, and your railings, your exterior wiring, and of course your power and gas connections are big. But we also look at the roof. We want to make sure we can estimate the remaining service life, look for any issues on the foundation, as well as your windows and doors, and any items that could be part of your garage, whether it's attached or detached.
Got it. So in our market right here where you're doing your inspections, what's the most common issues that are coming up during a home inspection?
Well,
what are those deficiencies?
Yeah, it really comes back to moisture. And here in the Pacific Northwest, we're blessed with beautiful weather, and some of it happens to be moist.
Thank goodness that's why we have all this green, right?
Absolutely. So you run into issues on your eaves and soffits that oftentimes are caused from clogged gutters, roofing leaks, siding damage, but also on the interior. More often than not, we run into old or non-functional smoke detectors or missing carbon monoxide detectors, things that really affect the health. But also hidden items like there's a toilet seal is a wax ring on the bottom of your toilet, and oftentimes that will start leaking a very small amount, and it will spread out under the floor where you can't see it. So we have ways to test for that. The other more common failure is up in the attic, and that's where your exhaust vents from your kitchen and your bathroom will lose their connection that vents out through the roof, which allows all that moist air to blow up into the attic and can cause damage from moisture and mold and things like that.
Yeah, and I really, home inspection, people think of home inspection for first when you purchase a home, second, not as common, but the sellers, but that's becoming more common and popular. But just current homeowners just don't think about it. And I just, when you've been in your home for 5 years, 10 years, you want to know what can be caught early, and that you just said, and there's some health things, there's things that can affect your family. So what factors is if the most effective when you're talking about the home maintenance?
First and foremost, just do it.
Yes.
It's one of those things that we want to get to, and we have the greatest plans to get to it. But understanding the seasonal maintenance requirements and the timing of each of those is really important. The most important things, if I were to say, would be clean your gutters. And not just once a year, but multiple times a year. It's amazing how they can get clogged.
If you don't want to clean it, hire someone to do it.
Exactly.
Yes.
Clean your roof. Make sure your furnace is serviced, especially if you're running a gas furnace, as well as having your fireplace flues inspected and swept, and caulking the seams on the outside of your house, around your doors and windows and trim, help keep moisture from getting into those places where we least expect it and can create some hidden damage. The last thing I want to say is test your smoke detectors and test your carbon monoxide detectors. Those really are a critical system in the home health.
Makes sense. So, Keith, let's talk about that inspection report, because I know it's a pretty detailed report. Can you share that with my listeners?
Absolutely. I'd like to start by saying one of the most important parts of a report is that you're using a licensed inspector to do that report.
Of course.
In the report is really simply words and pictures, but those words are really designed to help explain the findings and support pictures that are actually in the report. There's typically a summary page which will include, I'll call them big ticket items or health or safety related issues. Because we look at so many things, there are typically quite a few things that we find. Most of them are minor, but your report serves almost as a punch list of things you would like to do when you get into the house, as well as the key items you want to consider in determining price and if that, in fact, is the right house for you.
Got it. So talking about maintenance and repairs, homeowners, should they be doing these on their own?
If they're qualified and if it's safe. I encourage homeowners to learn their home and do the things necessary to keep it healthy and safe. And in many cases, that is just the simple maintenance that's often overlooked.
So what about hiring a professional? What areas, or should they really be hiring that professional?
Well, with regard to safety, anytime you're working on electrical or plumbing, getting it close on plumbing repairs really isn't what any homeowner wants. And I know that everybody has the best of intentions, but professionals are trained, licensed, and insured to make sure that things are done right.
Makes
and
sense.
Gives insurance to the homeowner.
Makes sense. So I'm talking to any of the buyers out there with this question, Keith, but I always tell my buyers that if you want to know something good about the home, you go to the listing agent. The listing agent represents the seller, not your inspector. Your inspector is there to tell you where the issues can be. So can a home fail a home inspection? Do you just ever say, you know what, don't buy it?
No.
I know you don't. Tell my listeners why.
Well, a home inspection really is not a pass-fail. It's more an opportunity to have somebody come in and observe the conditions and report on them. That's
and make
the
a
job.
decision if they want to.
And so what we want to do is make sure that we can provide the details that allow the buyer or seller, depending on the process, to make the correct decisions moving forward.
Got it. Makes sense. And the quality in your home inspector, Keith, it's so important. Can you please share with my listeners why that is?
Repairs are very, very expensive. From a home buyer's perspective, having the ability to have those identified and resolved prior to moving in just makes a much easier and cost-effective process in the long run. From someone who's selling their home, it will save them thousands of dollars by repairing things ahead of time rather than losing value and negotiated price in their home.
Yeah. So Keith, are you giving with all these items that are listed? And again, a lot of times the inspection it can be overwhelming because there are so many items sometimes. But it's those little tiny things, which there are a lot of, and some of the things that could be big. Are you giving them an idea and saying, you know what, I can't tell you what the cost of this is going to be, but I can give you a range and say, this is $10 to $100. This one could be $10,000 if you don't get it addressed. Are you doing that?
Absolutely. We'll try and give the clients an idea of the scope of the repair so that in many cases we'll work with them if they're capable and have the experience so that they can repair it themselves.
Got it.
Or if necessary, we'll tell them what we think the expected cost would be. And
I think that really gets to the quality of a good inspector, because I've seen some that don't do that. And when you're not telling that story to the client and they don't know what to expect, it's a hard position to be in. So I think that's a key in when you're hiring your inspector, to find out that they're really going to give you that realistic idea of what these items are going to cost. And also, for all my sellers out there listening, really to get a home inspection, not to get one to think because you don't want to know what the condition of your home is, so the buyers aren't going to know. Trust me, the buyers are going to know. And what you want to do is you want to find out early so you can fix those issues, because if you get in a renegotiation situation, you're in a desperate situation at that time. So it's not going to go so well for you. So get those things taken care of up front, know what you're looking at, and if you can't afford it, you're disclosing it up front, and you're going to figure it out at that time and whether you're going to get a buyer. But they'll figure it out when they hire their own inspector. So you figure it out first, right, Keith?
You bet.
Keith, thank you so much for coming in. It was a pleasure to sit and chat with you, and excited to have both of you in studio because I'm friends with you guys and we're involved in some of the same networking industry groups, and I appreciate your wealth of information, and I just had a lot of fun with you today, so thank you.
Thanks, Tina.
And that's the show. This is your host, Tina Mitchell, and don't forget your mortgage expert as well. That's what I do for my full-time career when I'm not talking to you here on the weekends. And just appreciate you listening to the show. Call in and let me know what you want to hear, who you want to talk with. And that's really what the show is about. It's about your money, everything that regards your money, so that you can have more of it, know how to save it, be strategic with it, and ultimately enjoy a better life for you and your family. Happy holidays to all of you, and I look forward to talking with you same time, same place, right here on 1150 AM KKNW next weekend.
The preceding program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.